entered. If there is any need of corrections or any missing of marks, please notify me so that I can correct your marks before we write the test 2 about the test 1 on the ACES. And these days, I don't know, my Moodle account is again not properly responding. So I couldn't manage to upload the notes on the Moodle, but I did regarding with the on the Teams, and some of the notes I uploaded on the WhatsApp. This week we had a tutorial. The question I uploaded on the WhatsApp group. Please go through it. If you are comfortable, then it's fine. Next week we will do another exercise on the WhatsApp group. Okay, for today our lesson, let me start with little bit explanation of calculation of new profit and loss sharing ratio, which is the slide 1 on the partnership introduction part. Are you all comfortable with the calculation of new partnership ratio on the admission of new partner?
No.
Okay, so I'm sharing the slide. Okay, can you see the slide?
Yes.
Yes, ma'am.
Okay, so the first part we already discussed what is the partnership accounting, what is the partnership deed, and in the partnership we also prepare the various account which is indicate the income of the business, the value of assets in the business, as well as uh, the capital account. So which one can indicate the capital of the business, how much capital they are having, and the current account shows that their proportion in the business. Okay. All right. So this part we already covered. There are two types of method we used when we are preparing for the wait. Yes, allocation of earnings. So the whatever the partnership has earned, it has been allocated to the portion of each partner. So to show the allocation of fractions on which the earning has been shared among the partners, we prepare profit and loss appropriation account where the net profit, how the net profit has been utilized to apportion the the profit in terms of the salary, bonus, or commission of the partner, and if there is also provision to pay the interest on their invested capital, we also subtract the interest paid to the partners on their invested capital, and the rest of the balance of the profit shared among the partners on the basis of their profit and loss sharing ratio. And the balance sheet can be prepared into two forms, either fixed capital and plus current account, or either using the fluctuating capital account. Under the method of fixed capital and the current account, we prepared two separate accounts. two accounts are to be opened as a capital account and the current account. In capital account, we only shows how much capital has been provided or injected by the partner. If they are still same as per the previous year, we do not show any changes. But if it is increase or decrease, we show the changes. In current account, this account record all transactions that affect the capital in terms of having the earn interest on capital, paying the charges, interest on drawing, and the salaries if they are getting. We include all these. And the another method, the fluctuating method, where we combine the capital and the current account together, which is known as fluctuating capital account, which is the combination of capital account and the current account. Okay, this question has been covered by the lecturer in my absence. The questions on the partnership of the two partners, Frame and French. Is this question covered by the visiting lecturer? Is anyone can confirm me?
No, ma'am.
This example was not covered.
Yes.
Oh, yeah, sorry. Anybody else saying something else?
It was covered, ma'am.
It was covered.
Yes.
Okay. So it's just a basic question on the partnership account where you have given in which ratio they are sharing the profit and loss, like 3:5, 2:5, and the trial balance has been given on the building, fixtures at cost, provision for depreciation, fixtures, debtors, creditors, cash at bank, stock. So all these are information we use to prepare the income statement and the statement of financial position. But with the details of capital and the current account and the drawing account, we can also prepare the partners capital account and the current account. And on this page, there is year-end adjustments, the adjustments of accrual expenses like office for 215 pulla wages, 720. Depreciation has been charged on fixtures at the rate of 15% by reducing balance method, and the building is depreciated by 5,000 in this year. Reduced provision on bad debts by 1,250. Partnership salary 30,000. So all this information we consider while we are preparing this uh, income statement, right? Just a minute. So this is the format of income statement, which is also previously known as trading and profit and loss account. We started by sales like we did in sole trader. Then we subtract the cost of goods sold by having the opening inventory plus purchases minus closing inventory. When we subtract the cost of goods sold from sales, it will give you the amount of gross profit. Then the reduction in the provision of bad debts because it's reduced from the last year. So how much it is reduced? It means it came, we are expecting some amount, but it has been reduced. It means some of the debtors has been paid. So that will always consider as a income in the business. So 150, which is reduced as a bad debts, is recovered. So recovered amount is a income. So we add that income 150 to the gross profit to get the total income. Then we subtract the other operating expenses like salary, then we add accrued salary and wages, office expense, then we add 215 accrued, carriage outward, discount allowed, bad debts, loan interest, and depreciation on fixtures and building. So the total expenditure for the year is 78,666. We subtract from the total income to get the net profit. Then we add the interest of drawings, how much interest has been paid by the partner, because that interest is a income for the business when the partners are paying interest on their withdrawn amount. The frame paid 900, French paid 600. So the total interest on the drawings is 1500 received. Then in the business, they also paid the interest on the invested capital. So interest on capital is an expenditure. That one has to be subtracted. For frame is 5,000. For French, 3,750. So we subtract by 8,750. Then salary paid to the partner. Uh, Salary also deducted from the net profit. Then after deducting the interest on capital and salary and adding the interest on drawing, the balance of the profit is become 48,815. That 48,815 has to be a portion between the partner in the ratio of 3 is to 2, because that was the ratio of profit and loss sharing. So the remaining profit, balance of the profit 48,815 has been apportioned in the 3 is to 2. 3 makes 29,289 and 2 19,526. So the total balance profit has been apportioned among the partners. Then the balance sheet, you know the balance sheet. Balance sheet we start by non-current asset. So this business has the non-current asset as a building and fixtures. Building, the cost is 210,000. The total depreciated value in the previous year is depreciated by 50,000, and this current year it is depreciated by 5,000. So the total depreciated value 55,000. So the net book value of the building is 155,000. Fixtures, the cost of the fixtures is 8,200. Total depreciated value is 4,800. So the net book value 3,400. Then the current assets. Current asset, they have debtors, cash at bank, and the closing stock, which is given in the question. Then you write debtors, cash at bank, and the stock, which is make total 141. We add, subtract the current liability, and then capital account. Only the difference in the statement of financial position for the sole trader and the partnership. In the finance by, we show separately the capital of each partners. Like the frame has 1,000 and the French has 75,000. So we do not write together. We have to show the portion of each partner and the portion of current account for each partner. How do we get the portion of current account? By this their individual accounts. We have to make their individual account, like how much the balance current the current account balance from the previous year is 4,100. Then they get interest on the capital. They also receive salary and the proportion from the profit. Are we together? Are we together?
Yes, ma'am.
Okay. So we start by the balance brought down from the last year. This balance is also given in the question, current account balance. So we brought down the balance, then we add the interest they receive on their invested capital, they receive salary and the proportion of the profit. Then it's make total 68,389. From that we subtract the interest on the drawing because the business they paid interest on the drawing and also the amount they've withdrawn the drawings. So their portion currently, their portion in the business is 35,689. We get 35,689 after subtracting the 900 and 31,800 from the total. Same we did for the French. We had their balance brought down. Then interest on capital is not entitled for any salary, so no salary, and share of the profit, which is 19,526. He withdrawn 28,200 and paid the interest on drawing 600. So the total of that side is 28,800, but this side total is 19, 20, I think 24,000 something. So this side balance is less than what they paid, what they withdrew. So the French has deficit balance. That's why the balance will come this side. Balance carried down by 4,324. So that's how we prepare the current account for the partners. You can also combine, make in one side, like instead of having separately, because the entries are same, so you can make one column for Prim and one column for French. Same thing, one column for Prim and another column for French, right? Okay, so that's how normally we prepare the income statement when the partnership business is exist and running their doing their operation. But during the running of business, if they wanted to allow someone to join the existing partnership, that one is known as admission of new partner. So a admission of new partner acquires two rights when a new partner joins the business. The first one is right to share the assets and liability of the firm, which is called capital. He can share the capital of the business, which is he provided either as a cash or in a form of assets. And second, the new partner also have a right to share the profit in future. This is called goodwill. Yeah, because business was already established and running from certain time to the business, to the industry. So he also have the right to share the profit made by the business in future. So what kind of adjustments need to made to admit a new partner? When a new partner admit to the partnership, it has to be recorded in the capital account. The capital of the new partner has to be recorded into the capital account. They also need to calculate the new profit sharing ratio, means because Previously, maybe there are three partners, now there are four. So the profit business made is going to be shared by four partners instead of three. So, how the fourth partners, in which proportion are they going to be shared? For that, they need to calculate new profit and loss sharing ratio. They also need to do the revaluation of assets and liabilities so that they can state the net book value in the statement of financial position. Then if there is any transfer of undistributed profit and loss, that one also need to state in the income statement. If there is transfer of any accumulated reserve fund, general reserve or reserve fund, and that amount also need to be stated in the new balance sheet or statement of financial position. And what is the impact on the goodwill, how the goodwill will be treated. So these are the major changes comes on the admission of new partner. So first thing, the recording of capital of new partner. When the new partner admit in the partnership, either the new partner bringing the capital as in a form of cash or in a form of check at the bank or in a form of asset. Maybe they are providing the land, the building to use for the business purpose. So it has to be recorded the valuation of asset or cash in a debit side, and the partner's capital account will be credited. Then when the new partners bring the capital, it has to be recorded in the capital account and the cash account or asset account. Then they also need to calculate the new profit loss sharing ratio. So new profit sharing ratio is the ratio which is used by the partners with new partner. And when they are sharing the same profit with the new partner, the old partner has to sacrifice some portion. So how much portion they are sacrificing, which is goes to the new partner, is known as sacrificing ratio. Did you ever heard about sacrificing ratio before? Anyone?
Mistake.
What is the sacrificing ratio? Do you understand any? Just think about it. I'll ask in one.
Isn't it the difference between the old ratio and the new ratio?
Ma'am,
Hello? Yeah, can you repeat what you were saying that the voice was cutting? Hello?
You were asking what the sacrificing ratio was.
Yes.
Is it not the difference between the new ratio and the old ratio?
No, is the difference. But if someone asks you what is the sacrificing ratio, how do you define? We calculate by subtracting the old ratio from the new ratio. That's how we calculate. But I'm asking, like, what do you understand by sacrificing ratio?
The ratio which the old partner sacrifices the share of the profit.
Yeah, this is the portion or the amount a old partner lose, which is goes to the new partner, right? When the new partners come, he bring the capital or he bring the skill, but at the same time the old partners proportion is also reduced because the same amount of profit also need to share with the new partner. So how much proportion they are losing? Like suppose if I'm in the partnership and I was getting 1000 pula as my proportion in the profit. And after admitting a new partner, now my profit is become 900. So from 1000 it is reduced to 900. So how much I sacrifice? 100 pula, right? The old proportion minus the new proportion. Are we together? Are we together?
Yes, ma'am.
Yeah, so like previously, as I said, I was getting 1000 pula profit as a partner, as a partner proportion. But since the new partner joined the business, now my proportion is become 900 instead of 1000. So I sacrifice by 100 pula, or if you are expressing in terms of percentage, you can say that 10%. So my sacrifice ratio is 10%. I'm losing. That is called sacrificing. So how we calculate the new partners join, how we calculate the new profit sharing ratio. For that, there are different terms and conditions. There are different scenarios. The new profit sharing ratio can be calculated based on the certain scenarios or the situations, like sacrifice of the old partners are not given. Like sometimes you are not given how much the old partners sacrifice their proportion when the new partners join. The second condition, the amount of sacrifice is unequal. It's not necessary all partners are sacrificing by the same ratio or by the same percentage or same amount. They may be sacrificing by different ratio, by different amount. Then uh, the new profit sharing ratio can also be calculated when the all partners are sacrificing equally. Sometimes they are equally sacrificing as per the terms and condition of partnership, or maybe only one partner sacrifice his proportion to the new partner. So these are the different scenarios on which the new profit sharing ratio has to be calculated. So now it's depend on uh, what scenario the partnership firm has agreed. Like number one, when the sacrifice of all partners are not given or not known. So when the uh, sacrifice ratio of all partners are not given, in this case, how we calculate the new profit sharing ratio? When the how much they sacrifice, like I just given the example of previously I was getting 1000, now I'm getting 900, so I sacrifice by 10%. But if it is not given, then how to calculate the new profit sharing ratio? For that, you can see this example. A and B are partners sharing profits in the ratio of 5:2. A and B are the partners who are sharing profits in the ratio of 5:2. They admit C partners as a new partner with the proposed ratio 1:5. So, on the basis of this information, we need to calculate the new profit sharing ratio and also sacrificing ratio of old partners. So the old partners, they have the ratio 5:2. 5:2 means 5 over 5 plus 2, 7, 5 over 7 and 2 over 7. And they agreed to admit the new partner with a proportion of 1/5. So in that situation, we assume that if the whole profit is 1 or 1 pula, then the portion of the partner C is 1/5. If the total profit is 1 or 1 pula, the portion of C is 1/5. So how much the portion of other partners? If you subtract the portion of C from the 1, you will get the proportion for other partners. So 1 minus 1 over 5, 1:5. It means the other partner proportion is 4:5. This 4:5, it is according to the new profit sharing ratio. So this 4:5 is how much in the old ratio? The 4 over 5 is how much when the partner A has the proportion 5 over 7. So 4 over 5 times 5 over 7, you will get 20 over 35. Same for the B. 4/5, 4 over 7. So how much in 2 over 7? Sorry, 4 over 5. So how much in 2 over 7? Because the old ratio was 2 over 7. Then you multiply, you get it 8 over 35. And the portion for the C is 1/5. So you also need to get, because 1/5, how much is 7 over 7? Because how much in 1? So it becomes 7 over 35. Why we are multiplying by 7? Because we want the same denominator for all the partners. So in 1/5, if you want to get 35 as a denominator, then in 5 you have to multiply by 7, because 7 times 5 makes 35. Then you have to also multiply on the upper side. So now the all partners have the same denominator, and the nominator is 20, 8 and 7. So new profit sharing ratio is 20 for A, 8 for B and 7 for C. That's how we calculate, right? Is that clear to everyone?
Yes, ma'am.
Okay. Then if you want to know that how much each partner has sacrificed, so we just apply the simple formula. Sacrifice ratio is equal to the old ratio minus new ratio. So the old ratio is 5:7 and the new ratio is 20/35. So you use the simple mathematics here. When you are subtracting one figure from the different denominator, then you have to calculate the same denominator both sides. Like here 7 is 35. So how we can get the same figure? Either you can multiply or divide by the same figure, but you cannot divide 20 by 7, but here you can multiply by, or yeah, you either here you can multiply by 5. So 20/35, if you multiply by 5, divided by 5, it will be 5/7 minus 25, 4/7. So you will get 5/7 minus 4/7 is 1/7. Or the same thing you can say that 5/35. So the sacrificing ratio is 1/7 because he sacrificed 1 by 7 for the new partner, and 1 by 7 is the proportion for the some proportion for the new partner. Same thing here is 2 by 7, here 8 by 35. So these are odd and even number. You cannot divide it by any even and odd figures. So this one here you have to change. So 2 by 7, it can be 7 times 5, 35. Then you have to multiply by 5 upside and down. So it's 10/35 and minus 8/35. When you have the same denominator, sorry, here minus, so 10 minus 8, 2/35. So B sacrificed 2/35 and A sacrificed 5/35. That's how it's created the portion for new partner C. Okay, sometimes even the first condition, they are not sacrificed equally, but sometimes there is unequal sacrifice. And we know that how much the old partner is sacrificing for the new partner. You can see by this example, A and B are partners sharing profits in the ratio of 3:2. At the beginning, there were two partners in the business. They are sharing profit and loss in 3:2. They admit C for 1:5 share in profit as a new partner and acquire 3/20 of A and 1/20 of B whole share. So partner C was given 1/5 share, which is acquire from A as a 3/20 and from B 1/20. So on the basis of this information, they are unequal sacrifice. A sacrificing 3/20 and B sacrificing 1/20. So on the basis of this information, a new profit sharing ratio need to be calculated. So we start with the old profit and loss sharing ratio, which was 3:5. 3:2 means 3/5, and for the B 2/5. When they admit the new partner, the A sacrificed by 3/20 and the B sacrificed 1/20. So how much they sacrifice? We subtract old ratio minus sacrificing ratio, which is make equals to the new ratio. So 3/5 minus 3/20. When you calculate, you know how to calculate those figures, fractions in the mathematics.
Yes.
Do you know how to deal with the fractions?
Yes.
Okay. So you have to first change to the same denominator when you are subtracting. This is the denominator and the down figure is called denominator. So 5 can be converted into 20 if we multiply by 4. So you have to multiply by 4 on top and the down. 3 times 4, 12 divided by 20. So 12/20 minus 3/20. 12 minus 3, which is make 9/20. Same for the B. The old ratio is 2/5 minus they sacrifice by 1/20. So the new ratio of the B. Same thing, you have to convert into the same denominator. To make 20 to the 5, you have to multiply by 4. 4 times 2, 8. So 8/20 minus 1/20. So 8 minus 1, which gives you 7/20. So for the partner A, the proportion is 9. For B is 7. And the new partner, he agreed to given the share 1/5. So 1/5, because here the denominators are 20, you also need to change the denominator for the C as 20. So you have to multiply by 4 on 1/5, which is make 4/20. So the new ratio of the partnership between three partners, 9:7:4. That's how we change. If there is unequal sacrifications by the old partner. Uh, this is the third condition when the old partner sacrificing equally for the new partner. So in A and B are the partners sharing profits in the ratio of 7:3. They admit C for 1:5 share as a new partner and equally from A and B. So this 1/5 portion is coming equal from A and B. So how to calculate the new profit and sharing ratio? Because A and B previously they are sharing in 7:3. 7:3 means 7 plus 3, 10. 7/10, 3/10. So the old ratio was 7/10 and for the B it was 3/10. Now this, because 1/5 is the portion of C and for 1/5 both partners equally sacrifice. Equally means half. So 1/2 of the 1/5, 1/5, half of it is called 1/10, and here half of the 1/5 is 1/10, because half will come from A and half will come from the B. They are equally sacrificing. So sacrifice is 1/10, 1/10. So the new ratio you will calculate the old ratio minus sacrificing ratio. 7/10 minus 1/10, 3/10 minus 1/10. So 6/10, 2/10, and the C proportion was 1/5. So to make same denominator 10, we need to multiply by 2. So we multiply by 2 on top and 2 down. 5 times 2, 10, which is give 2 over 10. So the new ratio is 6 raised to 2 raised to 2. That is the new profit and sharing ratio. When the partners are equally sacrificing their proportion for the new partner. Did you understand this calculation?
Yes, ma'am.
Everyone? Anyone who is still confused on it? Are we all good?
Ma'am, wait, the whole, the two over two, where did we get that from?
Which one? This
The
last
the
part
whole the whole number, yes, that
or the
multiplied
C?
1/5. Yes, ma'am.
No, we didn't get from anywhere because you see that in the new ratio, the ratio for A is 6 over 10, right? The ratio for
Yes, ma'am.
the partner B is 2 over 10. So you
So
can see that the denominators are the same. So for to calculate the partner C, we also need to make the same denominator. So what is the number for which we multiply by 1 by 5th, which is give us 10 at down, because the partner A has the 10 as a denominator, B also have out of 10. So C should be also out of 10. So if we multiply by 5 by 2, you will get 10, right? That's why we multiply by 2
yes,
to
ma'am.
make the same denominator, right?
Yes, ma'am.
So now all three, this is 6 out of 10, this is 2 out of 10, and for the partner C is also 2 out of 10. Then it makes 6 raised to 2 raised to 2 as a new profit sharing ratio.
Okay, I understand.
Okay. And the another situation when the in the partnership, if new partner is joining, not all the partners sacrifice, only one partner sacrifice his proportion to share with the new partner. That is another scenario. In sometimes in the partnership they agreed, okay, in future if any new partner is joining, not the all partners proportion will affect because maybe they are more important, their contribution is higher. Only one partner can share his proportion with the new partner. So in this situation, um, how to calculate new profit sharing ratio, right? So A and B in the partnership in the ratio of 5 raised to 2, they admit C as a new partner with their share 1 by 7, and this 1 by 7 share acquires all from partner A. So they is sharing 1/7 portion of partners A's. So in this situation, the old ratio for the A is 5 by 7. How is become 5 by 7? 5 plus 2, 7. So A portion is 5 by 7 and B portion is 2 raised to 7. So 5 raised to 7 and 2 over 7. Now A sacrificing 1/7 portion because this much is going to the partner C. So how much is remaining? 5 by 7 minus 1 by 7 because both has the same denominator, same figure as a denominator. 5 by 7 minus 1 by 7. So from 5 we subtract 1, we remain by 4 by 7. B is not sacrificing because only one partner is sacrificing. So B portion will be remain same, 2 by 7, and C is admitted on the agreed share 1 by 7. So A has 4 by 7, B is 2 by 7, and C is 1 by 7 because all has the same denominator. Here is 7, here is also 7, here is also 7. So the new profit sharing ratio will be 4 raised to 2 raised to 1. 4 raised to 2 raised to 1. Like that we calculate when only one partner is sacrifice his proportion for the new partner. This one is simple. You know how to calculate it?
Yes, ma'am.
Okay. Anyone still have any doubt on this? Alright. And the last one, when the new sharing of the incoming partner is not given. Like in the previous all the example you have seen that the new partners admitted with a sharing of 1/7, 1:7. Here the new partners are admitted by 1:5 share. So, but sometimes we don't know how much the new partner is given the share. In that case, how to determine the new profit and sharing ratio? Like for example, A and B are partners sharing profit in the ratio of 5:2. They admit partner C as new partner. He acquires 1/7 portion from A and 2/7 portion from B. But how much he get is not given there. The share of the partnership is not given there. But we have given A gives 1/7 his portion and the B given 2/7 portion to the partner C. So the old ratio was 5:7, 5/7 and 2/7. The the rationale they given to the new partner is 1/7 and 2/7. So after giving the 1/7 portion of the 5/7, you multiply 5/7's portion 1/7 because he given 1/7 portion or the part of the 5/7. So how much it is? It is 5/7 49. Same the partner B, he gives two partner B. Partner B given 2/7. So 2/7 of the old portion, which is also 2/7, which make 4/49. This is the portion given by the A and B to the C. So the C portion is become 5/49 plus 4/49. 5 plus 4, 9/49. So how much portion remain for the A? Old portion minus the portion they give to the C. So 5/7 minus 5/49. Then you multiply with the figure to make same denominator. You multiply by 5 to the 7, which is no 7 7. 7 sevens are 49. So you multiply by 7. 7 times 5, 35/45 minus 5/49. So 35 minus 5, which is give you 30/49. Same you will do for the B, and C is the portion they get from the A and B. Now all the denominators are same. Here is also 49. For the B is also 49. For the C is also 49. So the new profit and sharing ratio is 30/10/9. So 30:10:9 is the new profit sharing ratio. We only given how much each partner sacrificing, but we don't know what is the total for the new partner. So in that scenario, we calculate like this. Are we all together? And sometimes when the new sharing ratio is also given there, in that situation, we normally use the new profit and loss sharing ratio when the new partner is admitted instead of old ratio. And we can also calculate how much partner A and B sacrifice, but we do not really ask on that. We can just calculate. Old ratio was 3 over 4 over 6, 2 over 6. The new ratio is 5 over 10, 3 over 10, 2 over 10. Then you just subtract to find out how much A and B sacrifice for the C. You just subtract the new ratio from the old ratio. Then you can find out the amount of sacrifice by the old partner if we ask to calculate. So these are the calculation of new profit and loss sharing ratio in the situation of admitting a new partner in the business. Any question on these slides? Okay, today with the group 1, I also did this exercise class activity. Understand the nature of current account, capital account, and the profit and loss appropriation account. Can you take a minute to go through the question? Take a minute. देव थोड़ा सा पानी पिला देवू प्लीज बेटा लाके दे थोड़ा सा पानी देव
Man, we can't see the question anymore.
I'm in a class now, brain. Are you reading the question?
No, man, we can't see it anymore.
Yes, the question. Can you see the Word document?
Yes, ma'am.
Leonard? Ma Leonard? Can I have some water, please? दे बंद करो टैबलेट यूज करना Thank you. Leonard, there's an apple in the basket, na? Just slice it in this bowl and give it to him. You can also take some. Can you see the Word document?
Yes.
Okay, can you please go through the question, see what informations are given there before we start to attend this question? So this question is saying that long and short are in partnership business who sells carpets. Uh, their individual investment in the business on 1st January 2018 were 160,000 and the short invested 70,000. For the year to 31st December 2018, the net profit was 90,000 and the partners drawing were long 26,000 and for the short is 32,000. For 2018, the partners agreed to share profit and loss equally, but they decided that from 1st of January 2019, right? And they decided by 1st January 2019, the partner should be entitled to annual salaries for 20,000 for the long and 30,000 for the short. Interest should be allowed on capital at the rate of 5% per annum. The profit and loss remaining should be shared equally by the partners. The net profit before dealing with partners' other payment for 2019 were 110,000 and for 2020 is 50,000. So the net profit before paying any other payment or benefits to the workers is for 2019 is 110,000 and for 2020 50,000. Are we together?
Yes, ma'am.
Okay. Then the amount of drawing for the long and short are as follows. In 2019, and the long withdrew 24,000 and in year 2020 he withdrew 22,000 and short in 2019 he withdrew 28,000 and in 2020 he withdrew 34,000. So on the basis of above information, prepare the profit and loss appropriation account and the partner's current account for the 3 years. For the 3 years which is mentioned here 2018, 2019, and the 2020. So, do you still remember the format of partnership profit and loss appropriation account? Hmm?
Yes, ma'am.
Okay, so we can make vertical format. So we always start with the amount of net profit. So you have to prepare for 3 years the profit and loss appropriation account. So first, which year will we begin?
(2018).
2018, right? So we start with the partners. We'll make long and short partnership firms and prepare partners for 2018. So we always begin with the amount of net profit. The net profit for the year 2018 is 90,000 In 2018, there was no any other information has been given for 2018. They start selling business 1st January 2018 by investing the capital 160,000 and 70,000. And during the year, the net profit was 90,000 and they withdrew 26,000 and 32,000. And up to 2018, they were sharing the profit equally. So there was no any other arrangement, no any other benefits paid. So we prepared the profit and loss appropriation account for 2018. The profit, this 90,000 profit will share equally. So both will get half of it. So the profit share to the long is 45,000 and the profit goes to the short is also 45,000. So 45 and 45, the total is 90. So then we have to prepare the profit and loss appropriation account for 2019. So how much the profit for the year of 2019? How much profit the company made? Number 4, clause. The net profit before dealing with partners' other payment for 2019 is 110,000 and for year 2020 is 50,000, right? It is given in the question here. It is given in the question here for 2019 is 110,000 is given there. So we will take from profit and loss appropriation account for 2019. So the net profit for 2019 is 110,000. Then we subtract by 2019 from 1st January, the partners are agreed to get the salary for long 20,000 and for short 30,000. So the salary paid for the long 20,000 and the for short 20,000. They are also entitled to get the interest on their invested capital by 5%. So the 5% of invested capital of long, how much capital he invested? Partner long, how much capital they invested? Devo?
100,000 and
Okay.
70,000.
अच्छा काटेगा. How much capital is given there?
Long is 160,000 and short is 70,000.
So 5% interest on capital, how much is going to be?
$8,000 and
Okay.
3,500.
Okay, so 8,000 for the long and 3,500 for the short, the interest on capital. So the total amount paid from the net profit so far before share the profit with the according to the profit and loss sharing ratio. You add them 20,000 plus 30 plus 8,000 plus 3,500 and subtract from the net profit 110,000 minus when you add them it becomes 61,500 So 61,500 subtracted from 110,000. So the remaining profit is 48,500. This 48,500 has to be shared equally among the partners. So 50% will go to the long and the 50% will go to the short. Can you try to prepare profit and loss appropriation account for year 2020 on the same format, in the same basis of the format? Try for 2020. देवू यहाँ जा उठ के वहां से. Please try to calculate for year 2020. एप्पल को वो खाए बाउल लेकर आ. बाकी सब खा लिया. झूठा. पूरा एप्पल खा लिया तूने. झूठ बोल रहा है. कितने टुकड़े थे उसमें? 6. अच्छा.
Ma'am,
Yes, please.
Ma'am,
Did
the
you
question
try?
I'm
is
seeing a negative.
Or you want to see the
I'm
question?
11,500.
Okay, so the net profit for the year 2020, how much you wrote? The net profit for year 2020. How much is the net profit?
11 negative.
Yes, it will give negative. It means the partnership firms make loss in year 2020, right? So the profit was 50,000 in year 2020. Then how much salary has been paid in year 2020? The salary to partners?
20,000 and 30,000.
Yes. And how much interest on capital paid to the partners? How much interest?
So it's 1,003.5.
Yes. So the profit was only 50,000. The salary was paid 50,000. And the interest on capital is for long 8,000 because the interest will be same for each year. And for short is 3,500. Okay. So how much loss they made during the year 2020? How much loss in the partnership firm? How much the amount of loss? because the profit was 50.
11.5.
Yes, the profit was 50, and from that the salary was paid 50,000. So this interest which is paid is 11,500, because in profit and loss sharing ratio, either profit or loss, they share in the same ratio. So in this question, they are sharing equally. So the loss which is business make with the 11,500 has to be shared equally by the partner long and short, which is make 5,750 for each. So that's how we prepare the appropriation account for year 2020, right? So we are done with the partner appropriation account. Then current account. How do we make the current account? So when we prepare the partner's current account, we also need to prepare individually for the all the years. So for 2018, and in the current account, they given the whatever they receive in the business, we record in a credit side, and what they are paying or they withdrawn, we'll write in a debit side. Wait a minute. So profit sharing is 45,000 for the long and 45,000 for the short. And then we subtract how much drawing, the amount they have been taken for the business. We do not write the capital in the current account, okay? It doesn't show the capital unless we are using the fluctuating method where we combine the capital and the current account together. So we only write how much share a portion they are getting as a interest, as a salary, or as a commission, then how much they've withdrawn. They've withdrawn 36,032. So the closing balance for is 19,000 and 13,000. Then you will prepare the partner's current account for the 2019. So whatever the balance is there, the balance will transfer to the next year. The balance was 19,000 for long and 13,000 for short. So we start with the opening balance, 19,000 and 13,000. So start with opening balance. Then in 2019, they also paid salary, interest on capital, and the profit and loss sharing. So the total of long is 71,250, and for the short it's 70,750. Then we subtract the drawings. After subtracting the drawings, the rest of amount is the balance. The balance carry down. So in 2019, the balance carry down is 47,250, and for short 42,750. Okay, so these two are the balances. We close the account. In the same manner, we prepare the partner's current account for 2020. Will you able to prepare the partner's current account for year 2020? Will you try to make for partners 2020?
Yes, ma'am.
Do you want to do it now or you want to do it later? Hmm. Do you want to do it now or later?
No, ma'am, now.
Okay. Please try, everybody. Like we did for 2019. Can you do it for 2020? Hmm. Hmm. Okay, just do it. I'm coming. Just do it. I'll check in 2 minutes. Hey. Okay, Leonard, go. You don't like to stay here. All right, so are you done with for year 2020? Hello? Hello? Are you done with year 2020? Okay, just
Yes,
finish.
ma'am.
Okay, so this one will show the deficit balance for the year 2020, right? So you have to calculate, subtract the drawing, because here you will show the interest and profit. Instead of profit, if it is loss, it will come in a debit side, and the drawing, then you will calculate the closing balance. Uh, I'll post the answer for 2020, then you can double check the way you did. All right. Okay, so that match we did with the group one. So we are ending our class also here. Is there anything you would like to ask? I was
No,
thinking to have
ma'am.
class on Saturday, but most of student they have some engagement, so I will see when we can have. If it is not this weekend, maybe the next weekend I'll conduct 2 hours extra lesson to complete